Have you ever wondered why x rays are so important to doctors in diagnosing their patients' illnesses? It's because the doctors get a clear picture of what's causing their patient discomfort. Just like how an x ray can provide a doctor with his medical diagnosis, a stock chart can help an investor determine whether the stock is worthy of investing or not. Charts tell a story and are a visual representation of all the important things going on with a company, such as earnings reports, drug trial results, analyst commentary, or a major merger or acquisition. All of these things provide clues to help determine whether a stock is a good investment or not. Instead of randomly buying a stock, charts can tell you whether it's the right stock to buy at that moment. Once you know why it's important to use stock charts and the basics of what's in a stock chart, let's put it all together and discuss the three telltale clues to look for when analyzing stock charts. Clue number one: what's the trend? With just a quick glance at a weekly chart, you can see if the stock is in an uptrend, a downtrend, or just trading sideways. You only want to buy a stock when it's already moving in the right direction, and that's up. Clue number two: what story is the price and volume action telling? Charts show you if the stock is being heavily bought or sold by fund managers and other large investors. You can literally see what they are doing by looking for unusual spikes in volume. Always check the volume when looking at any changes in share price that will tell you how serious buying or selling actually is. Clue number three: is the stock finding support or hitting resistance? Think of this like a floor of support or a ceiling of resistance. When a stock pulls back, you really want to see if it finds support at key areas, such as a moving average line, a prior buy point, or even sometimes a round number in the stock's price. The concept of resistance is especially key when it comes to spotting the best time to buy a stock. Start by checking these three telltale clues. Doing that will give you invaluable insight into the health and outlook of that stock. Once you familiarize yourself with these three key concepts, you will be ready to spot profitable chart patterns. Those are the launching pads that kick off virtually all major stock moves. If the stock does find support, it means large investors are stepping in and supporting the stock. That can be a sign to hold or even add shares to your position if the stock rebounds higher from that support level. But if the stock fails to find that support and crashes right through a moving average like the 10-week line in heavy volume, that's often a trigger to sell. That means fund managers are now aggressively dumping shares. The best time to buy is when the stock proves its strength by punching through a former line of resistance in strong volume. We'll get more into that later. But all in all, when you are looking at a stock chart, start by checking these three telltale clues. Hey everyone, thank you so much for watching MarketSmith India on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a